Boy, oh boy, just another truly exciting day in the markets. And I'll tell you what, we got tomorrow even more exciting, 8:30 a.m. GDP and personal income and outlays. And I'll talk about the significance of those in this video, along with sharing the charts for you. But I do just want to take a moment to say how lucky I am to be where I'm at right now in my life. And there was a point in time that me and my brother were talking about our situations, and we're like, there's got to be things worse than what we do right now. He said, yeah, like being a vacuum cleaner, that would really suck. And I was like, you know what? I hear that being the wind really blows. I don't know if you guys heard it or not, but even the cat thought that joke was so bad that even he groaned a little about it. So moving on from there, GDP, the advanced estimate for Q1 coming out tomorrow at 8:30 a.m. The market is probably going to move pretty heavily in the pre-market hours when that first comes out. We'll watch and see what happens for us, and I'll also give the commentary on that. And then also personal income and outlays with PCE comes out tomorrow as well. And then, like I said, for what could be coming for us, we got our JOLTS numbers this morning. We'll take a look at those and talk about what all that could mean for non-farm payrolls and the unemployment rate, along with the technical analyses on the charts for where we could potentially go and some of the ways that I'm playing this market. And by the way, you guys can absolutely see that early on over at the Discord. Links down in the description. I'll tell you more about it later. Here we're looking at the Qs. Guys, I put up the simple moving averages. Here we're in the post market. It's 4 p.m. just now. As a matter of fact, we're about 11 seconds past as I record this video. And VWAP snuck up there. Again, there we go. So the 50-day simple moving average this time, we fell just shy of it, and we put up the exponential moving average, which is this red line coming down through. We're actually dead in between the 50s, the EMA, the SMA, and this is still a very precarious position to be in. The market can still be very nimble from here for what exactly happens to come our way with those GDP numbers that we have coming out. SPY. Here we go, this red line coming down here, that's that 50-day EMA. We came up and smooched it and then retraced a little bit, settled back down. It's going to be very tight, I'm guessing, up until we see those GDP numbers come out. Like I said, I'm going to give commentary on what we can likely expect based on the numbers that we see and where we could potentially go from there. IWM came up and once again tried out this trend line that we have right here that's part of this massive bull channel that I've been talking about for a while now. This thing has been going on for like 17 years of development on this one. Comes to life under the green. I started my dollar cost averaging down there, and it's paid off pretty handsomely so far. It does live in between the green and the red, especially between the white and the yellow. It dies up above the red, just so that you're aware of the way that I interpret this. Bitcoin, by the way, trying once again, and I actually took a position this time. I shared that play over at the Discord before the market had closed, before I started making this video. I think we could finally be getting that push that's going to hold up above that 95,000. And we'll see. I have enough between the short hedges that I have out right now for a potential sell-off. I wanted to pad my long positions a little bit as well, just in case things go pretty well for us. Bitcoin, by the way, is kind of a nuanced play. And one of the nuances there is if we do end up in some sort of recession and we need to be bailed out by money printing, that puts even further pressure on the bond market that's already thought to be unstable. Bitcoin and gold could be the places that continue to benefit off of those. Now, mind you, tariffs could also be part of that as well. So like I said, it's a bit nuanced. I think BTC should absolutely be there. XRP went a whole lot of nowhere today so far. Very indecisive as per this candle that we have. The US 10-year Treasury yield. Now, mind you, I use TMF, which is the triple leverage 20-year, but the 10-year is something we should absolutely track for market purposes. I said we were near the 200-day. As we looked at that this morning, we actually dropped down below it a little bit. I think this shows some of that nervousness that we have in the markets for what's coming up our way the next few days. TMF, by the way, has just crossed over the 50 today decently well. Now, mind you, the price action's been good, but the volumes have been rather subdued compared to what we had recently. But these were some pretty massive volumes that we had during that sell. And now we're starting to see not a lot of conviction in this. Depending on what we see, things leaning towards recessionary could actually give us at least some near-term upward pressure for what we have for the long-dated treasuries. So wanted to share that there. Now, mind you, I should also update Tesla just for a quick moment, because once again, as we close in the market, we actually closed just above the 200-day, which is a bullish thing. So even Tesla is preparing itself for what could potentially be coming our way based on the numbers that we see coming up for us. So let me pop up trading economics here. We'll talk about the numbers we got today and how that could cascade into the next few days that we have coming. So here we go. Trading economics. What do we get? Good trade balance. So this one even beating out the estimates by about 10ish%, we're going to call it. And what that means is we are importing a ton more than we are exporting. That's a drag on GDP to see a number like that come in, and is labeled for March. So it does go against Q1. We want to keep that in mind. By the way, the Atlanta Fed GDP now. Atlanta, there we go. We'll bring this up just for a quick moment. I meant to bring this up for you. For Atlanta GDP now, where's this looking? Even with the gold adjustment, looks like it's down about negative 1.5. There it is. On your screen, you can actually see that right there. Without the gold adjustment, negative 2.7%. Blue chip consensus is still, well, we got to touch this little tiny triangle here is in that negative part, and that median or average that we have right here in the middle of this happens to be between 0 and 1%. So we'll get to that GDP in just a moment. For right now, JOLTS today, where did that come in at? So JOLTS opening 7.129. I said that September's low was 7.1, and what we were looking for was staying up above that. We did, and the market did all right. So a little bit softer, not alarmingly softer, still better than what we had in September. That can still technically be considered on trend if we were to look at the line graph for that one. And so not too rattlesome. Tomorrow GDP, however, man, this number right over here, this 0.4% is what the forecast is. The trading economics forecast is coming in at 0.5%. So we'll see if we get those numbers come in positive. If they do, I think there's going to be more upward pressure to the markets, or at least some release of downward pressure on the markets, and the markets move up based on the numbers that we see. So there are some other things that go into it as well. So the employment cost, that's going to go a lot into what we see in terms of inflation and stuff like that. Hopefully that still comes in subdued. And actually 10 a.m., there we go. I think I may have said 8:30, but it's 10 a.m. because of GDP being earlier is where we start to see the core PCE numbers come in for us. Consensus estimate on that, by the way, about 0.1%. Personal income coming in at 0.4%. And it started to zip one more time. Personal spending coming in at 0.6%. So we actually want to see spending up. We want to see income up. We want to see inflation stay down into the very low, but still positive numbers. We actually don't want to see that go negative. That's going to contribute to a recession story, and we don't want that. GDP growth rate, by the way, same thing. We want to see that. Well, actually not quite the same. We definitely want to see a positive number. Large positive numbers are welcome all day. Market would absolutely love stronger than expected GDP, stronger than expected economic growth from that. Negative is not going to be great for us. So ISM manufacturing, probably going to still come in contraction here. We're going to see what that comes out on for Thursday. Friday's the big one again, non-farm payrolls. And we got soft numbers for JOLTS. Hopefully we come in a little stronger than what the consensus says for non-farm payrolls. And I talked a lot this morning about that 4.2%. We are okay at 4.2%. We are great at 4.1%. We are wonderful at anything under 4.1%. So we'll see what we get. 4.3% is going to start being a little bit nerve-wracking. Do we start talking about triggering the SOM rule again? That's something that we have to consider. That could start hitting those headlines. It's going to be downward pressure for the markets if we see 4.3%, 4.4, and so on, and even higher above that. 4.4, I think, is going to be in a near-term catastrophic way for we'll get something not very good, especially if it's in combination with a negative GDP, ISM manufacturing in contraction, and then negative numbers for PCE coming out with personal income and outlays. And so if all of it says the same story, if all of it contributes to the same narrative, then you have confluence. They work together to push the market down. If we have confluence where they all work together, that they're giving positive news, better than expected news, then we have confluence to let that downward pressure come off, or even hopefully get some upward pressure and it starts to push the market upward. So that's the way that I'm interpreting the numbers that we see, and I plan to have my trades set up accordingly. As of right now, I'm set up with my long positions in my overall portfolio, but then I also have my long short-term trades that are out there, and then I also have some short hedges as well, ready to go for whichever way this market should happen to take us. And I think it's going to play out pretty well for us. I said down in the description is the link for the Discord. If you use the earner tier, you can see me and the other panel experts over there, our trades, our analyses, our thoughts. You can ask us questions over there. You have the bread bot, you have AI tools, you have advanced charting tools, all sorts of things. The product services, seemingly endless. The earner tier is what gets you unrestricted access. Like I said, links in the description. And if you guys want to learn about technical analysis yourself, you guys can do that using the link in the description for Stockmo Academy. There's a technical analysis course, which also includes the bread recipe, which I trade on, whether it's day trades or longer term trades. And that bread recipe goes right along with the bread bot that's available in the Discord that I told you about earlier that would use the same sort of things, although it tracks for you when those big moves are coming, whether it's up or down, then you can trade accordingly. I like to use options. There's an options course as well that you can get access to. If you bundle those two courses together, it saves you a ton. Using code word DOCTOR for any combination of those courses is also going to save you more. Guys, let's get back into the charts for just a little bit more on this, and then we will talk more from there about wrapping up this video. So what are we looking at here? Well, let's go over to the Qs for just a moment. If we get some really good news tomorrow, watch for that 200-day. We're probably going to blast past the 50-day. EMA, SMA, you name it. The RSI is ripe for that bullish move upward. We're above the 5, the 13, the 20. We're ready to go. If GDP comes in stronger than expected, if inflation stays subdued, we are really well set up for that if we can beat expectations. If we cannot beat those expectations on that, if we get negative GDP, we're probably going to see downward pressure. Instead, if we come in at about where consensus is, still I think that we're going to have some of the downward pressure because some of the uncertainty goes away. So 2 out of the 3 cases, we move up. If we get negative values for GDP, or maybe even comes in 0, that comes in a completely flat, that there would be no growth, the market's probably going to hate that as well. So maybe it is, 2 for 4 either way. So we do want to watch for that. For what comes out for GDP at 8:30, it's probably going to set the tone for what we have for the markets. And then don't forget the Atlanta Fed Nowcast for Q2 also comes out tomorrow as well. We want to be watchful for that. If it opens up negative and Q1 is negative, then we start seeing headlines about recession. Most likely the market sells. At least that's the way that I think it's going to happen. We'll see if the market also thinks the same thing. So if we do go to the downside, watch the 20-day that's down here at about 452. Upside of the 200 is about 491. For the SPY, where do we end up? Well, let's put up the simple moving averages here. Just like we did, we'll take away the EMAs for a moment. The 50 simple moving average is up here at 559. 573 is where that 200-day is. If we get numbers that refute the idea that recession is here, well, then I think that we come back and we retest that 200-day up at 573. Decent little move from where we're at right now, whether it happens all at once or over the next several days. If instead we sell down, it's probably going to get at least down to this 20-day, depending on what we get, down to about 534. I would watch the 200 and I would watch the 20. Might have a small stop at the 50. Maybe that happens as sort of an intraday sort of thing. IWM is probably going to be the most reactive. And if I take down the SMAs and our EMAs and put up SMAs, there we go. Probably down to the green line at least if we get recessionary news down below this 20-day that we have. And then up above that, we got the 50, but then we also have this yellow trend line, which happens to be right around 210-ish is what we'll call it. And then up above there, I think that it's going to actually take a little bit. I think some of that downward pressure coming off for IWM, the Russell 2000 stocks, they are more reliant on the 4 pillars that prop up markets than the Qs and with SPY. So I think it's going to be more reactive. I think we're going to get more of a movement out of the Russell 2000 stocks that we have here, tracked by IWM. So Bitcoin can be a little bit of a coin flip. Like I said, it's a bit more nuanced for Bitcoin because of the inflation hedge that it happens to be. Now, mind you, we'll see what happens with tariffs there, but then also what happens if the flight to safety is not treasuries. Bitcoin can be one of those places where we see some contributing price action to it to the upside. So it's something that we could watch. But also, I should say that if the market also goes risk off, Bitcoin could be one of those risk assets that happens to sell anyway. So hopefully not. Hopefully that's not the case, especially the call option that I have in place. I would like to see that push higher from right now. Like I said, it's a bit nuanced. Now, Tesla. Recession for people in the automotive space, as Tesla stills where they get the predominant amount of their revenue, it's probably going to fall away from that 200, and maybe we go back and retest support down at about 218, 220, falling down through the 50 and falling down through the 20 because it does have a higher beta. It's going to be more, it's going to have bigger movements than the overall indices that we would get for such as the S&P 500. Or the NASDAQ 100. So to the upside of this thing, though, probably up to about 326 if we get a strong move on good news for Tesla. So we want to watch the 200 days. If we have good news for QQQ, for SPY, maybe even potentially for IWM, good news, no recession, we move up. The 200 days, what we should be watching for either that day or over the next several days, depending on how strong of a reaction we have. If instead we get recessionary news, we want to be watchful for those 20s and what happens around them. If we break down through the 20s, then they act as resistance, where that's the mean that we keep on returning to over time. Then we want to watch that for that faster moving average. That gives us a little bit more near-term indication for that sort of price action. We currently have a bit of a bearish positioning being for Qs, for SPY, for IWM that were below the 200-day for each one of them, but we would like to see more and more reason for that to happen. I've mentioned the 4 pillars in my previous videos. If you've been following this channel for a while now, it's GDP. We want strong GDP. That's going to help prop up the markets. Subdued inflation is going to help prop up the markets. Easy monetary policy is going to help prop up the markets. And then finally, a strong labor market is also going to prop up the markets. And any instability that's either perceived or that actually exists in those pillars is going to allow the market to start to experience weakness, potentially even tumble quite a bit just on the, like I said, the fears or actual evidence of it. Just fears, it's going to fall somewhat, like we saw that pullback to the 23.6. If you go back to my old videos from the October 2002 low up until the most recent peak that we've had, I think it may have been in January. I'd have to go back and look and see. So either at the end of 2024 or beginning of 2025. So October 2002 to January of 2025, I think that's when the most recent peak happened for the S&P, for example. We pulled back to the 23.6 on the Fibonacci retracement. That's just with fears over recession, inflation, tariffs. If we actually have runaway inflation, or we actually have crushing tariffs, or especially, I should say, with a little, maybe some emphasis on this one, some actual recession coming our way, well, then potentially, or at least, bigger thoughts, further evidence of recession, maybe that's the thing that either returns us back down to that 23.6, or if we keep on seeing more and more news perpetuating that narrative, that's when we start to pull back to the 38.2. But guys, I don't want to speak doom and gloom here. I want to talk about preparation, because that first big opportunity that we saw recently was at the 23.6. If we pull back to it, that's another big opportunity for a huge upside. If we pull back instead to the 38.2, that's an even more massive potential for upside, and why I continue to build the alpha in my portfolio using the options trades that I do. And like I said, if you guys want to see those, the link's in the description for the Discord. You want to learn to do what I do, the link's also in the description for those courses. Use code WORDDOCTOR when you sign up. Bundle the courses for even more savings. Guys, I'm going to let you go. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.